IDFC Securities joins us from the sidelines of the IDFC Investors Conference. Shirish, good morning. Thank you very much for joining us. From the FIIs and other financial institutions, domestic institutions who have gathered at your conference, what is the sense you are getting? Is this a buy on dips market?
Yeah, people are quite sort of optimistic about the recovery in the earnings of companies. So people are trying to evaluate which companies to buy. There has been, we have about 220 companies in our conference. So people are actually looking to sort of choose companies which they think earnings will recover faster over the next 3 to 4 quarters. And that's where the focus of the conference is and most of the investors is.
Okay. Shirish, hi, good to see you in, and congratulations on the conference as well and the 200 companies that are being featured there. In terms of an earnings turnaround, which are the sectors of the companies that investors are most bullish on or more confident on in terms of a turnaround?
Investors are more focused on cyclical industries like automobiles, to some extent on financials, private banks. Commodities, people are more mixed because of fall in commodity prices, and people are more sort of looking for beneficiaries of fall in commodity prices. In that, some of the chemical companies people are more bullish on, where the raw material price fall has helped them improve their margins. So these are the 2 or 3 categories where most investors are looking for a quicker turnaround.
Okay. Let's go away from the consumption theme and speak about some of the infrastructure plays, cyclical plays that you are looking at. Not really cyclical, infra plays. Adani Ports is one of the stocks that is in your list. It saw some steep falls, but you think these levels are good buy levels?
Yeah, we are pretty bullish on Adani Ports because although their volumes were a little bit lower than what we were looking at in the second quarter, and there seems to be a little bit of concern on coal imports, our view is that the coal imports are not going to fall very sharply over the next 12 to 18 months. They may stagnate a bit at the last year's level of about 230, 240 million tons on the market as a whole. And so we don't see, we are not really worried on the volumes really degrowing or anything of that sort in Adani Ports. Plus, the Mundra port is a hugely cash flow throwing port, which the port company seems to be utilizing that cash flow into building a string of assets around the country, both on the east and the west coast. So we like the strategy of the company. The stock has corrected about 10% from the result levels, and we think it's a very attractive level to buy the stock today from a 12 to 18 month standpoint.
Okay. Shirish, the other stock that you like is Larsen & Toubro. The Q2 numbers in terms of guidance as well as the order inflow guidance which was cut didn't disappoint you, and how would you maybe project the second half as well as valuations?
Obviously, the order flow guidance was muted, and we didn't expect the cut from 10 to 15% to 5 to 7%. I think it was an outcome of losing a few orders in the power sector and probably one odd order in DFC. But overall, we think the order backlog is pretty strong at 2.4 trillion rupees. And if they're able to execute this order backlog over the next 18 to 24 months, the bottom line could be very healthy at about 20 to 25% growth over the next 18 to 24 months. And that is why we believe that L&D is a good pick at current 1350 levels. The stock has corrected about 12 to 13% in the last 1 month because of the expectation of poor results. So we believe that the poor results are factored in at the current price. And from here on, the key thing is if they can execute their order backlog and report a 14-15% kind of revenue growth, then the stock should really do well over the next 12 months.
Okay, let's talk about stocks we don't talk about often. PNC Infra, that's a stock you all seem to like a lot. What's going for that company?
It's a very good construction company which has also had about 4 BOT assets, road assets. And it's a very niche company doing very well. Their margins are pretty healthy at around 14%, and they continue to grow. Their order flow has been pretty strong over the past 6 months, and we expect them to have a similar order flow over the next 6 to 9 months as well. and they will have order backlog upwards of about 40 to 45 billion by the end of FY16, which will drive their earnings growth at about 20-25% over the next 2 years. Valuations are pretty reasonable at the current levels of around 530, and hence we think it's one of the better picks in the construction segment.
Okay. Power Grid, you've recently upgraded the stock.
Yeah, we basically in Power Grid, the stock had sort of underperformed over the last 6 months to 9 months, primarily because of concerns on one of the HVDC lines commissioning schedule and whether states will agree to pay for the HVDC line or not. There were a lot of concerns in the market. The stock had underperformed. So we thought the valuation was pretty reasonable at around 1.5 times FY17 book and about 10 times FY17 earnings. We thought valuation was in our favor. On 1st of November, Power Grid actually commissioned the line and they started getting revenues from the states. So that concern is by and large behind us, and that was the logic for us upgrading the stock. We think the stock can give a steady 15 to 20% return over the next 12 to 18 months.
Okay, and finally, I actually wanted to ask you about Nagarjuna Construction. It is of all the infra companies, to be fair, the less indebted one. But is it also a beneficiary of some new activity in the young states, Telangana and Andhra Pradesh?
So far, they have not really benefited as such because Telangana and Andhra hasn't awarded a lot of construction orders which have gone to Nagarjuna Construction. But with the new capital of Andhra Pradesh, the new Andhra Pradesh, the work starting on the new capital, I think there will be a beneficiary, big beneficiary of the new orders which will come out of the capital reconstruction or fresh building of the capital. Obviously, so far that has not been the case because hardly any major orders have been awarded for it. But over the next 12 to 24 months, we do expect them to be a significant beneficiary of that. Moreover, if you see their order inflow over the past sort of 12 months or so, it has been very widespread. They've got road orders, they've got building orders, they've got water supply orders. So I think this is one company which is very well diversified, and they will benefit from increase in ordering activity from the government side over the next 12 months, and which is why we like the company. Obviously, the balance sheet has got addressed, the debt part of the balance sheet has got addressed with the rights issue about a year ago, and now they are in a very comfortable position. They are also in the midst of selling some of these BOT assets and the property assets which they have invested over the last 5 or 7 years. So overall, I think we don't worry about their balance sheet, and we think they will continue to grow at 20-25% from a sharp growth after last year, which we saw because of the debt reduction.
All right, just wanted a quick question on two sectors that are moving rapidly. First up, sugar. You all won't latch on to it?
We don't cover sugar, so okay. It's difficult for me to comment.
Well, my sense is you're not going to be covering sugar. The other one as well, but that was airlines. There's a huge guy on the IPO, and there is a huge penalty that all of them have got. Nothing interesting over there, not your cup?
So basically, we don't cover it, but I think the airline stocks have been primarily driven by the lower fuel prices or ATF prices. And as long as the fuel prices remain sort of weak or remain cheap, I think the stocks will have a lot of interest in them. Once the oil price outlook changes, then we'll have to see how the stocks behave. But again, as I said, we don't cover it, but directionally, I think it's a pure bet on lower oil prices, and they are the biggest beneficiary. So that's the reason for interest in these stocks. As far as the penalty goes, I think, I mean, I haven't seen the details of the penalty, but obviously that will get appealed, and we are yet to see the last word on the penalties now. I mean, I think like in cement, this will also get contested.
Fair point. We'll leave you to your conference. Thank you very much, Shirish, for taking time out for us. We also have to hurry back to that